Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Tractor Supply Company Annual Report. Tractor Supply Company offers a wide range of products and services catering to rural lifestyle enthusiasts. The company's merchandise includes livestock and equine feed and equipment, poultry supplies, fencing materials, and sprayers and chemicals. They also provide companion animal products such as food, treats, and equipment for dogs, cats, and other small animals. In addition to these offerings, Tractor Supply Company sells seasonal and recreational products like tractors, lawn and garden tools, bird feeding equipment, power tools, and other outdoor gear. Their truck, tool, and hardware products include accessories, trailers, generators, lubricants, batteries, and various hardware and tools. The company also operates a clothing, gift, and decor section featuring clothing, footwear, toys, snacks, and decorative merchandise under various brand names. Tractor Supply Company operates retail stores under the Tractor Supply Company, PetSense by Tractor Supply, and Orscheln Farm and Home names, as well as online platforms through TractorSupply.com and PetSense.com. Their target market includes recreational farmers, ranchers, and others who engage in outdoor activities. With a rich history dating back to 1938, Tractor Supply Company has established itself as a leading provider of products and services for rural lifestyle enthusiasts. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what might cause a company's stock price to remain stagnant over a period of time. The stock price of Tractor Supply Co. has remained relatively unchanged in the past year, a phenomenon that can be attributed to several factors. One possible reason is the lack of significant growth or innovation within the company. If Tractor Supply Co. has not been able to expand its market share, increase revenue, or introduce new products and services, investors may lose interest and confidence in the company's future prospects. Another factor contributing to stagnant stock prices can be external economic conditions. Economic downturns, changes in consumer spending habits, or shifts in industry trends can all impact a company's performance and stock price. If Tractor Supply Co. operates in an industry that is experiencing decline or stagnation, its stock price may reflect this trend. Additionally, the company's financial health and management decisions also play a crucial role in determining its stock price. Poor financial management, such as excessive debt, low cash flow, or inefficient operations, can lead to decreased investor confidence and stagnant stock prices. On the other hand, strong leadership, effective cost control, and strategic investments can help drive growth and increase stock value. Lastly, market sentiment and analyst expectations can also influence a company's stock price. If analysts have lowered their earnings estimates or reduced their target prices for Tractor Supply Co., this can lead to decreased investor enthusiasm and stagnant stock prices. Conversely, positive analyst reports and increased investor interest can boost the stock price. In conclusion, the lack of significant changes in Tractor Supply Co.'s stock price over the past year may be due to a combination of internal and external factors, including lack of growth or innovation, external economic conditions, financial health, and market sentiment. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be categorized into three main areas: execution of multi-year strategy, expansion and innovation, and external factors. Revenue growth is primarily driven by the execution of a multi-year strategy, which includes sales growth from executing this strategy, increased customer base through convenient shopping experience and needs-based product categories, and expansion of direct sales program to new markets. Additionally, opening new Tractor Supply stores, increasing selling square footage, and comparable store sales have contributed to revenue growth. On the other hand, revenue decline is primarily driven by external factors such as higher tariffs and increased delivery-related transportation costs, disruptions to distribution network or timely receipt of inventory, and labor shortages or work stoppages in the transportation industry. Other drivers of revenue decline include delays or interruptions of deliveries due to national and international transportation, infrastructure disruptions, shortages or interruptions in product supply, and disruptions to payment processing services from third-party vendors. In terms of stable revenue drivers, the livestock, equine, and agriculture segment has remained relatively stable over the years, as well as the companion animal and seasonal and recreation segments. The own brands and exclusive product categories have also grown steadily, contributing to stable revenue. The net income for fiscal year 2025 remained unchanged from the previous year at $1.1 billion, despite a slight decrease of 0.47% due to an unexplained reason. In terms of profit margins, there was a marginal improvement in gross margin, increasing by 16 basis points to 36.4%. This increase is attributed to cost management initiatives and everyday low price strategy, which partially offset the negative impact of higher tariffs and delivery costs. However, the operating profit margin for fiscal year 2025 remains unreported, making it difficult to assess its change from the previous year. Similarly, the net income as a percentage of net sales also lacks data for both years, preventing any comparison or analysis of this metric. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the provided data, in fiscal year 2025, the company recorded a net cash provided by operating activities of $1,635,300,000 on page 36 and $1,635,259 on page 52. This significant amount indicates that the company is successfully converting its profits into cash. A comparison with the previous year's figures also reveals an upward trend in the company's ability to generate operating cash flow. In fiscal year 2024, the net cash provided by operating activities was $1,420,835, which is lower than the current year's figure. This increase suggests that the company has improved its operational efficiency and is better equipped to manage its finances. The consistent generation of positive operating cash flow is a crucial indicator of a company's financial health. It allows the business to invest in growth initiatives, pay off debts, and reward shareholders. In this case, the company's ability to generate substantial operating cash flow positions it for long-term success and stability. The company's debt level and interest expenses have undergone significant changes over the past few years. In terms of debt level, there is a clear downward trend. The total debt decreased by $67 million from December 28, 2024 to December 27, 2025, and also dropped from $1,832,000,000 in 2024 to $1,765,000,000 in 2025. This indicates that the company has been successful in reducing its debt over time. However, the interest expenses have shown a mixed trend. While there is an increase of 8.11% in net interest expense from 2024 to 2025, and also a significant jump of 27.1% from 2023 to 2024, it's worth noting that these increases are not consistent across all years. The net interest expenses actually decreased slightly from $69,144,000 in 2024 to $69,757 in 2025, which suggests some stability in this area. Overall, the company's debt level has decreased significantly over time, but its interest expenses have shown a more complex trend with both increases and decreases depending on the year. Management's outlook for the company is one of growth and expansion. The multi-year strategy focuses on targeting recreational farmers, ranchers, and rural lifestyle customers with convenient shopping experiences. This includes expanding and deepening the customer base through various initiatives such as remodels, new fixtures, and enhanced product offerings. The company plans to open approximately 100 new Tractor Supply stores in fiscal 2026, representing a selling square footage increase of approximately 4%. Additionally, there is ample opportunity for new store growth in many existing and new markets. The expansion of e-commerce capabilities, including buy online and pick up in store and ship to store programs, will also play a significant role in driving sales. In terms of supply chain and logistics, the company aims to improve inventory productivity and in-stock inventory position by focusing on merchandise procurement, vendor line reviews, and testing of new products and programs. The expansion of distribution center capacity by approximately 865,000 square feet with a new facility in Nampa, Idaho, is also expected to begin operations in Q4 2026. Financially, the company plans to implement the balance of the share repurchase program through purchases made from time to time. It will continue to leverage its sale-leaseback program to fund new store openings, focusing on cost control and productivity. Overall, management's strategy is centered around growth, expansion, and improving customer experiences through various initiatives. The company's financial activities have been marked by two significant initiatives. Firstly, the company has a history of paying out dividends to its shareholders. This indicates that the company is committed to rewarding its investors through regular cash distributions. The details of this dividend payment can be found on page 27 of the relevant documentation. In addition to paying dividends, the company has also engaged in share buybacks. This means that the company has purchased a portion of its own outstanding shares from the market. By doing so, the company aims to increase shareholder value and reduce the number of shares in circulation. The specifics of this share buyback program can be found on pages 31 and 73 of the documentation. There are valid concerns about inventory buildup and supply chain disruption in the company's operations. Historically, the first fiscal quarter has seen high inventory and accounts payable balances for seasonal products, page 8. Moreover, overstocking unpopular products due to misjudging market trends can lead to inventory buildup, page 11. The company also faces external risks that could disrupt its supply chain. Extreme weather conditions can cause disruptions to distribution and transportation networks, page 13, while changes in political or economic conditions, tariffs, and trade tensions can impact shipments and transportation costs, pages 60-17. Additionally, delays in shipments, labor shortages, and disruptions to national/international transportation infrastructure can negatively affect business. Inventory buildup concerns are also mentioned on several occasions throughout the report. Inventory purchases are a primary ongoing cash requirement, and inventory levels typically build in the first and third fiscal quarters to support seasonal sales volume, pages 32-35. The reallocation of funds to construct a new distribution center may indicate some level of concern or strategy related to supply chain and inventory management, page 37. Furthermore, there are risks associated with inventory impairment, including excess and slow-moving inventory, changes in market conditions, and consumer purchasing patterns, page 54. Liability for sales returns, breakage income, and loyalty program costs also suggest potential inventory buildup or supply chain disruption issues, page 56. That concludes the financial summary for Tractor Supply Company. Feel free to comment below, and I will be happy to answer them when possible.